Welcome, dear traders. Asian stock markets were in the black following a rise on Wall Street. Sentiment improved markedly after the news that China may give full access to doubting reports of Chinese companies listed on Wall Street. Despite the positive news, traders remained very ahead of the Jackson Hole Symposium. They are also milling over whether China has stepped up enough economic stimulus to support the economy hurt by various domestic problems and a weaker external demand. There are risks of investment outflow as China's watchdog sticks to policy easing. Now major central banks are raising key rates to rein in inflation. And the US dollar remained almost unchanged against its main rivals. The Australian dollar was down by 0.4% against the US dollar after a strong rebound yesterday. The yen consolidated in the sideways range. Investors continue to digest the comments of Fed officials before the symposium. The rhetoric remains the same. They are backing aggressive tightening until inflation is under control. Traders have almost no doubt that Jerome Powell will express a similar point of view in his testimony. If this scenario comes true, US government bond yields are likely to jump as well as the US dollar. Shares, on the contrary, could drop. Given a batch of hawkish comments, speculators no longer expect rate cuts in 2023. They have lowered expectations that the Fed will slow monetary tightening as inflation remains at 8.5% against the 2% target. Nevertheless, they will scrutinize Powell's speech for any remarks about a slowdown in economic expansion that could force the Fed's abandon a hawkish stance. Interest rate futures now imply a 60% chance of a 75 basis point hike in September. And last year taught the Fed chair to be more careful with his words. He is sure not to make the same mistake twice. Back then, they reassured investors that the regulator would stick to a dovish stance in the long term. However, this prediction was wrong. Notably, Powell is still considered to be a dove. It somewhat impacts speculators' decisions. The short-term rally of shares is mainly fueled by the principle buy rumors, sell news. And the US dollar index was trading without a clear-cut trend during the Asian session. It was hovering below a 20-year high. Traders preferred sitting on the sidelines before the symposium. Although it's easy to predict the main message of Powell's speech, there could still be some surprises. Now, traders are pricing it a 75 basis point rate hike. However, they do not exclude a 50 basis point increase in September as well. Hopes for this scenario could rise if Powell's comments are considered less hawkish. On the other hand, more hawkish remarks could facilitate the rally of the US dollar index, pushing it to a yearly high of 109. And this week, the greenback has already touched a 20-year high. However, it failed to consolidate at this level. The fact is that some analysts forecast a slowdown in economic expansion. It could force the regulator to revise its monetary stance. Yet, the second quarter GDP figure turned out to be significantly better than expected, given the green light for aggressive tightening. For this reason, traders are buying the US dollar after its decline ahead of the test of 109.00 points. The bulls are likely to push the US currency to 109.29, a new high over 2022. After that, it may hit 109.77, a high of September 2002, before approaching the level of 110. The Japanese currency has slid into the sideways channel. It's likely to trade in the range of 135.20 and 138.00. Its movements are rather weak, so it's difficult to predict its further trajectory. Yesterday, its outlook was quite mixed. The US dollar was expected to trade erratically in a wide range. However, it did not happen. As a result, the dollar-yen pair was moving steadily in the range of 136.16 and 137.24. On a Friday, it has the chance to reach 138. The price has already touched this level this week. This is the lowest level the pair could approach given the Bank of Japan's ultra-loose stance. The quotes may also test 139.40, a high of July 14. The next target will be the 140 level. And the Bank of Japan will hardly change its stance due to the current state of the Japanese economy. It means that the regulator will maintain the soft monetary policy in the foreseeable future. The next meeting will be held on September 21 and 22. The central bank is unlikely to announce any changes. The latest survey conducted by Bloomberg showed that Haruhiko Kuroda would not move to the normalization of a monetary policy even after inflation had risen to 3%. Analysts believe that the key rate will remain unchanged until the end of Kuroda's term in April. There are rumors that the Bank of Japan could revise its monetary policy stance if the core inflation stays 3% for 6 months. The regulator strongly rejects these rumors. Local economists see inflation running at 2.5% till the end of the year. At the end of the next year, inflation is projected to approach 1%. Yesterday, the Aussie rebounded to 0.6980 amid a drop in the greenback. However, it was unable to climb above 0.7000. In the Asian session, the Australian dollar slid into the downward corridor. The next-term prospects for the AUD-USD pair seem dismal. The greenback is expected to grow across the board if Powell confirms further aggressive tightening. The quotes may briefly return to the lows below 0.6900, which were tested earlier this week. The longer-term prospects look brighter, with the target level located at 0.7100, and the Aussie may regain momentum amid trade relations between Australia and the United States. The Australian dollar is still significantly weaker than the US currency. However, China's decision to cut the key rates means that the country is unwilling to use a weaker national currency to boost the economy. It's rather bullish for the Australian dollar. So, a seasonal factor also plays a big role. August has always been a challenging month for the Australian dollar and a good one for the greenback. And however, the current August is not so unfavorable for the Aussie. The exchange rate is only slightly weaker than at the end of July. At the same time, the Australian dollar looks much more attractive than the Japanese yen, which is unusual for this time of year. Now, investors are looking for clues about whether inflation has peaked. Any signs of it may indicate a more favorable scenario for the US economy and the global one. Judging by the dismal situation in some markets, it's still early to count on the steady recovery. And that's all for now. Subscribe to our channel and stay up to date with the latest market news. And see you soon!